Hello, everybody, and thank you for tuning in to the Liberty Report. Today, Daniel McAdams is with me. Good to see you, Daniel.
Good morning, Dr. Paul.
Daniel, we have a special guest today, a friend of the Liberty Movement, and we're delighted to have him with us, Peter Schiff. And Peter, you know, was an advisor to the presidential campaign in 2008. Peter, good to have you with us today.
Great to be with you, Ron.
Good. Peter is the CEO of Euro-Pacific Capital, a financial advisory company, but he has many companies that he's been involved in. And Peter, why don't you just give us a real brief introduction on how you spend your time? You're very much involved in education and investments and writing, and you get a lot of interviews, but just give us a little bit of idea on how you're spending your time these days.
Well, most of my time is with my clients now, trying to help people protect themselves from this dollar crisis that you and I both agree is on the horizon. In fact, I'm surprised it hasn't happened already, but I think it's because the rest of the world has just been so brainwashed by the mainstream media, by the central bankers, by Wall Street, that they just haven't figured out the problems that the Federal Reserve has created over the last 7 years with 3 rounds of quantitative easing and 0% interest rates. I think that the U.S. economy is poised on a much bigger cliff than the one we went over in 2008. And you and I know that it was the Federal Reserve that laid the foundation for that crisis. And now with the same policies, only worse, they've laid the foundation for a much greater crisis. And I'm really spending a lot of my time, I was going to be up in New Hampshire at an event where Rand was going to be, and I had to cancel that. I just don't even have the time to travel. I'm just so busy now with the businesses, with Euro-Pacific Capital, with Schiff Gold, with Euro-Pacific Bank, just really trying to help prepare people. I do believe that this window of opportunity is going to be rapidly closing, and people need to act quickly to get out of U.S. dollars, to accumulate foreign assets in places like Switzerland or Singapore or New Zealand, to buy some gold, buy some mining stocks, do that before the bottom really drops out of the dollar, when everybody else finally wakes up to the reality instead of the fantasy world they've been living in.
You know, Peter, once in a while people ask me about, well, this is what we need to do, and they'll describe a more conventional conservative approach to the problems that we have. And they won't be exactly where we are on the emphasis on the Fed. They'll say, well, reduce tax rates and reduce regulations, which I think, and I'm sure you would agree, would all be good. But isn't there a point where some of those who indicate that, and they don't seem to care too much about deficits, that they ignore the Federal Reserve? It just seems like there's so few of us out there emphasizing the Fed, and that, of course, is why we work together so well, is because you put a tremendous emphasis. But what's the ultimate solution to the Fed?
Yeah. I mean, look, you're a medical doctor. I mean, when you have a cancer, there is no superficial treatment. You've got to remove that cancer or the patient is going to die. And just, adjusting tax rates marginally, if you don't do anything about the cancer in the system, the patient's not going to recover. So we need to go to the root cause of the problems. We need major surgery. This isn't, cosmetic stuff. We need to really get down deep beneath the surface and get rid of the problems. The Federal Reserve is at the heart of it, because the Federal Reserve is enabling the big government. It's subsidizing it. It's making it possible to run all these deficits. It's propping up Wall Street. It is basically giving us the Novocaine to numb the pain so we can keep on letting the disease get worse without actually, doing anything about it. And by the time, the Fed can no longer numb the pain because the sickness is so bad, it's too late.
Peter, it's Daniel here, and I just want to talk a little bit about politics. You were involved in Ron's campaign in 2008, and you went ahead and ran for the Senate a couple of years later. Have you changed your views on whether politics might be the key to solving some of our problems, or have you completely given up on that as a hopeless cause?
No, I haven't given up on it. I mean, I ran in Connecticut, and Connecticut is a problem state to begin with. But look, Rand ran the same year that I ran, and he won. And and he's running for president. I wish he were doing better. I wish the public weren't so fooled maybe by a guy like Donald Trump. But he's certainly hitting a lot of nerves that I wish Rand was tapping into as well, because I think he's a better messenger for the correct message. And I do think that Donald Trump does point out a lot of the problems, but his solutions aren't going to work. In many cases, his solutions will make the problems worse. But I haven't given up on it. And, you know, maybe this isn't Rand's year. Maybe he'll be able to come back in 4 more years. I don't know. But that's the only real solution that we have. I just don't think the electorate is ready for it yet, because there's still too many voters that are going to buy into the free lunch, and the Federal Reserve makes it all possible for people to think that all this stimulus is working. But the reason that guys like Donald Trump or Bernie Sanders are popular in the first place is because the average American knows it's not working. He just doesn't know what the real solutions are. He just knows that he can't find them in the mainstream politicians. And hopefully, guys, you know, people can transfer their support from a guy like Trump to a guy like Rand, maybe not, maybe in 2016 or maybe in 2020. But I still have hope that we can eventually do the right thing. But it is not easy, you know, in this democracy that we have. Unfortunately, the founding fathers tried to save us from ourselves by creating a republic, but we couldn't keep it, and we voted ourselves into bankruptcy.
Peter, your company emphasizes, you know, doing things overseas. It's called Euro-Pacific Capital. Some people approach me with the question mark of, you know, what should we do? Keep our money here and work it out here, or go overseas and do some investing overseas? And some people will even say, well, Europe is, you know, a shaky place. I mean, they're socialists, welfarists, they have problems, they have migration problems, geopolitical problems, and actually, you know, a lot of hot wars in Eastern Europe. What's your answer to that? Why do you feel that people should, you know, think about alternative places to have your investments?
Okay, well, fortunately, the world is a big place. It's not all the U.S. and Europe, and we underweight Europe too. I mean, I am cognizant of the problems in Europe. I just think that ours are even bigger. I mean, they have big problems there, but I think ours are being obscured by the fact that the dollar is still the reserve currency. So we still get to profit by everybody else's mistakes for now. Everybody buys dollars when they're worried about problems, even if our problems are bigger than the ones they're worrying about in Europe. And because the dollar is overpriced, we get to buy imports cheaper. We can keep these artificially low interest rates. We get to live beyond our means. But there are countries that you can invest in, right? And in Europe, there's Switzerland. You know, Switzerland's a fine example of a country. They're not doing everything perfect, but they're in much better shape than the Eurozone or the United States. And we invest in places like Singapore, countries like New Zealand. Nobody is doing it perfectly, but you know, you have to just figure out which countries are making the fewest mistakes, which countries have the most amount of economic freedom, the fewest regulations, the lowest taxes, the soundest fiscal policies, the less reckless central banks. I mean, no one's on a gold standard. It's all fiat money, but it's a question of degree. It's a question of which central bank is going to print the most, which central bank is going to keep interest rates the lowest, the longest. And we try to find the best investments around the world, and we make them for our clients at Euro-Pacific Capital. And then to hedge ourselves against all countries, we buy gold. You know, we don't only buy gold, but we have a portion of our money in gold and gold mining stocks. The average investor doesn't have anything in gold, and I think that's completely foolish. You have to be completely ignorant as to economic history to be so complacent as to not have any money in gold, especially considering what's going on today.
Peter, you know, one of the things that we deal with a lot on the show is the government's numbers versus what we think are the real numbers, and we kind of wanted to get your take. You know, we hear what the government says about price inflation, what the government says about the unemployment figures, what the government says about our wealth. What would you say about their statistics versus the real price inflation, the real unemployment, and the real wealth?
Yeah. Well, you know, propaganda didn't end, you know, with Nazi Germany. Not that it's the same degree, but governments are involved in spin, right? I mean, that's what we call it now, and trying to paint a rosier picture than the one that actually exists, so that the electorate is more happy with their circumstances and more likely to vote to reelect the powers that be. So I think the government has a vested interest in painting a rosier picture than reality, and so they constantly readjust the methodology behind these numbers so that they never keep track of them honestly. So now you've got an unemployment rate that doesn't count people who who are involuntarily part-time workers who are still looking for jobs, but they can't find them. They've accepted part-time work. Those people are really unemployed, but they don't count. Or the people that have given up looking. They want a job, but they're not even looking because they don't think one exists. They would work if they could get a job, but since they don't think there's one there, they don't look. They're not counted as being unemployed either. And so it doesn't really measure it. Or the inflation numbers are so, jiggered around with hedonics and substitution that I don't think we're ever going to have official inflation in the United States, despite the fact that the cost of living is rising rapidly. When you actually poll the voters and ask them, what is your biggest problem? Consistently, the rising cost of living is always the #1 concern of the average American, yet it's according to the Federal Reserve, their main concern is that the cost of living is not rising fast enough.
I think this is obviously true. They can rig these numbers and give us false numbers, and they can use propaganda. But also they rig markets in a different manner. When the crash occurred in '87, Reagan established his President's Working Group on Financial Markets, sometimes referred to as the Plunge Protection Team. And precisely, I believe it exists to prop up stock prices. And we'd have to say maybe they've been successful in their goal, and principally with the Federal Reserve. So do you think that we do know that what the Fed is doing, but do you think they get more involved than just Federal Reserve policy? Do you think they get into trading and propping up markets, or do you think it's strictly low interest rates?
Well, they absolutely prop up markets, which is, why, we shouldn't point fingers at China, talking about throwing stones and living in glass houses. In fact, the Federal Reserve, when Ben Bernanke launched quantitative easing, his stated goal was to prop up asset prices. He wanted to prop up stock prices, he wanted to prop up real estate prices, and of course he wanted to prop up bond prices. And they do that by actually going into the market with the money they create out of thin air and buying up treasuries. The goal of that is to lift the price of treasuries so that the yield is suppressed, so that the U.S. government can keep on borrowing money, because then it can afford to pay the interest, because the interest is so low because the Federal Reserve has rigged the market. But the other dangers, as you well know, are the malinvestments that you create when you artificially suppress interest rates below the market rate. We saw that in 2008. The Fed inflated a real estate bubble that never wouldn't have existed had Alan Greenspan not lowered interest rates to 1% and then been too slow to raise them back up. That gave us all those malinvestments. The consequence of the liquidation phase was the 2008 financial crisis, but the Fed didn't allow the market to finish the job. Instead, they used even more reckless monetary policy. They didn't lower interest rates to 1%. They brought them all the way down to 0, and they've been there for 7 years. They expanded their balance sheet with 3 rounds of quantitative easing. The amount of malinvestments that have been made over the last 7 years dwarf what was made during the years leading up to the financial crisis. We are in so much more shape now. You got Ben Bernanke now on a book tour, The Courage to Act. The real title of his book should have been A Coward's Way Out, because he helped create these problems, and we're going to have to reap the whirlwind for what he sowed.
The making of predictions in Austrian economics, we're taught that, it's hard to predict exact timing. Like you and I would be convinced that we don't know exactly what the price of gold will be tomorrow or 1 week from now. We do know trends. We do know that low interest rates and artificially inflating the currency has consequences. But nevertheless, I'm sure you're asked, and you have to plan for it, and I'm asked this all the time. Well, I want to know when it's going to happen. There are bubbles out there. But all I can say is, and you've already alluded to it, it's different now than it's ever been, because they have been able to manipulate the currency and the economy for a long time when we're very wealthy and the economy is very strong. But since 2008 and 2009, it's a different ball game, so we're on the verge of it. But when you get asked that question, do you ever get a little bit more specific other than saying, get prepared, it's coming soon? Or do you have an estimate when you think we better be very prepared?
Yeah, you always get in trouble when you try to put a time on it, because more often than not, you overestimate the ability of everybody else to figure out the problem. But I obviously know we're a lot closer to the end game than we were a few years ago. And I think there's a lot of signs that we're getting closer based on the fact that the Fed has backed itself into this box. It's been bluffing that it was going to raise rates for years. And now it got to the point where it's supposed to do it, yet now it's coming up with more excuses why it can't. Meanwhile, the bubble is already deflating without the Fed pricking it with a rate hike. I think they're going to be forced into another round of quantitative easing, not because the prior rounds worked, but because that's the only thing they can do to kick the can down the road, right? But at this point, that can is so enormous because we've kicked it so many times, and the road is getting shorter and shorter. So, look, I tell people, you got to be early, right? If you don't prepare early, you're not going to prepare at all. You're not going to finesse it perfectly, and so if you're not too early, you're too late, and you can't afford to be too late. Currency crises come quickly, the value is lost, and it can never be retrieved. So people have to do something in advance, and if you're years too early, just be patient, because in the long run, it's a lot better than being days late.
Peter, I want to thank you very much for being with us today. It's great having you here, and I'm sure our audience has enjoyed your comments.
My pleasure, Ron. I really appreciate your continued effort to try to spread your wisdom and spread the lessons of liberty and sound money in the Constitution. You did it when you were in Congress, and now you're doing it after you've retired, and you've imparted those values on your son, who I know in his heart believes as much as you do in liberty. And what bothers me is when there are people that say, oh, the apple's fallen far from the tree. I know your son pretty well, and that apple is right on that tree, and he's every much as committed, I think, to the principles enshrined in the Constitution as you are, and hopefully your supporters will recognize that and support him as well.
Thank you, Peter, and I want to thank the audience for tuning in today. I think this was a very informative interview, and it should stimulate people to think about the problems that we have and prepare. And Peter is exactly right. You got to prepare. And sometimes people say that individuals like Peter and myself and others, we're too pessimistic. But let me tell you, if you put your head in the sand and you ignore it and pretend something that isn't true, those are the people that should be called pessimistic. But if you know what's wrong and you know that you have some answers, I think it's totally a positive message. Even though over the years I have talked like I have talked today, and how Peter talks about all the problems and we're suffering and all that, most of the time the people in the crowds that I talked to said that what they like about me is my optimism, which really, really pleases me a whole lot. So I want to thank our audience for tuning in and listening, and I'd like them to come back to the Liberty Report soon.